What's up, everybody? Friday morning. Hope you guys are having a great day. Welcome to today's edition Daily Market Commentary. I'm your host, Chuck Fulkerson. Want to talk today about something called the line in the sand. And what in the world is the line in the sand? And it's where we make that determination where we say, okay, the markets have changed, and now I need to switch my bias overall. And we look primarily at swing lows and swing highs to identify that. A couple of weeks ago, we had said that we may have the most important trading day in the market for the entire year because we put in a higher swing low. But once we had established a higher daily swing low and a higher weekly swing low, that then created a good quality line in the sand for us to say, if the markets drop below this level, now we're going to change our bias. And we've hit that. We actually hit that in the overnights last night. So I want to take a look at that from a technical perspective so that you can see what does a line in the sand really look like and what does it do to change our biases going forward. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts and the updates, and leave comments down below. We love to hear comments. We love to hear what people have to say. So let's go ahead and dive in, starting with the S&P. So we're down 33 points in the S&P in overnight trading. And the most important thing for me is this swing low that we had established last week. And so when I move this to a daily chart, as I look at this daily chart, one of the things that I had paid specific attention to was the fact that we put in this swing low. Now, this swing low was unfortunately unable to put in a higher swing high. But our weekly chart also showed us an official higher swing low, right? Once we got this green candle, we had a higher swing low. But what that means is that we've now established a boundary. And our line in the sand is essentially, let me get rid of all of these drawings here real quick to make it a little bit cleaner to look at. Our line in the sand is essentially this boundary of the low that was established right through here. And we created that, and we actually got high enough for us to say, well, yeah, that's a true swing low. But we know that once you get below that swing low, you've created a new line in the sand overall. And we dropped below there in overnight trading. So by dropping below there in overnight trading, the line that I was very specifically looking at is this area right here. And we dropped not hugely below it, but we've got to be alert. We've got to be ready. And as a trader, my job is to trade the chart that's in front of me, right? And so from a 4-hour perspective, what is my trend? Well, my trend is most decidedly down from a 4-hour perspective. We did give a decent rally up, but then this big sell-off switched our overall trend direction and moved us back down. Now, looking at this from the 4-hour to the 1-hour chart, we had a couple of days where we based a bit sideways. And the level that I was really looking at, and we talked about it when we talked about our volume profile, was this area right here. We didn't, unfortunately, make it back to this area for a good reversal entry on the short, but we did say if we get below these lows, then you may have a breakdown trade. And that's exactly what happened in the overnight session. We dropped down below that level, and now we've continued to trade down overnight. So looking at reversal trade and opportunities for entry today, I'm going to look up to this area here, which is what's called a wick over wick level. That wick over wick level is going to be a really good potential reversal point. I don't know if we're going to make it back up to there before the day wraps up, but it may be a level worth looking for a reversal. The other area that I would pay specific attention to would be just price breaking below that Globex low. This could be one of those days where we start off down and we continue to trade down throughout the day. Now, if you get short at this 39.06 by 39.27, your stop has to be higher than that, and the tightest that stop can be utilizing a 15-minute chart would be above 39.45. So you've got a fairly wide zone here that if that level's too wide for you, if that level's too wide for your risk tolerance, slide down into the smaller time frame and look at that 39.20 by 39.27. But certainly I would also look at a breakdown for price just to continue to trade lower and looking at price continuing to drop from this level. So those would be the areas that I think make the most sense in the S&P. But where does it look like for a big picture, longer term perspective? Well, I need to start looking now at my next quality areas of demand. And they come into play at what was our prior our prior area of resistance. So our prior area of resistance, get rid of some of these drawings here. I'm going to get rid of this just to show from a clear standpoint. Our prior area of resistance would be this swing high right through here, which was actually our high just before the COVID crash that we saw, that 35% drop in the markets due to COVID, and then we rallied up very, very hard from that level. Is this a possibility that we come back into this 3,500 level? I think it's a very strong possibility, especially since we're down at 38.87. And as we continue to see a more hawkish Fed, that would indeed kind of give us the sentiment that that's the good place for price to go. Now, the other side that we have is that we had a little bit of basing in here before a very strong move up. That was the origin of this rally where you could see a decent amount of buying potential. Now, move that over from the S&P to the NASDAQ, and these are the levels that we talked about in the NASDAQ, little supply level we fell off of. These are all areas that were of particular importance. We broke below the line in the sand of the NASDAQ as well, and so by breaking below that line in the sand of the NASDAQ, we've now set up that continuation of the short. And these are the levels that we looked at the other day, right? We had said that we were cautiously optimistic on the bigger term, but we're trading still to the small time frame downside. And that's really what set up for a reversal there. Now it's looking right about that 12,000 number. But what does it look like on a bigger picture? Well, I would not be surprised at all to see the NASDAQ trade back down around 10,000. 10,000 in the NASDAQ, I think, is a very, very realistic possibility and a pretty strong potential move down. Now, what would that mean for our overall drop from the high to the low? Well, from there to about 10,000 would be a 40% decline in the NASDAQ overall. So just keep that area in mind as you're looking at your next tradable opportunities. We would be looking to say, all right, down here might be the next potential buying area in the NASDAQ. Now, I'm still going to need confirmation of strength on a weekly time period before I would want to jump back into that. But in the meantime, we trade the chart in front of us, which is, at this point, continuing to trade to the bearish side. So hopefully that makes sense. We look at lines in the sand as places to say that we've changed our bigger picture bias and perspective. But knowing that my number one rule is I'm always going to trade the chart that's in front of me. Yes, we can project out what we think the market may do, but more importantly, trade the market that's in front of you today. Thanks so much, everybody. Hope you guys have a great day. Till tomorrow, I will talk to you soon. See ya.